Hello and welcome to Finextra. I'm Emily Horler and I'm here with Tony O'Donnell of Infosys Finacle, and we're talking about blockchain and distributed ledger technology. Thank you very much for joining me, Tony.
It's my pleasure, Emily.
So what potential is there for blockchain in the banking industry?
I think there's huge potential for blockchain in the banking industry. Directly, if we take areas like trade finance and securities exchange, technology has massively impacted the front office, and we do trades very, very quickly now, but the settlements process is still quite lengthy and takes time. Technologies like blockchain can bring huge efficiency and collapse those value chains. On the retail part, there will also be huge disruption. We're seeing a significant amount of commentary about how blockchain is going to revolutionise payments and settlements. I'm less convinced about that. What blockchain has done is raise significant challenges, I suppose, that are inherent in how we do that at the moment. There are inefficiencies and overheads that need to be eliminated. Blockchain may not necessarily be the answer to those questions. Distributed ledger technology, which is the heart of blockchain, I think will, but probably in a format that's different from what we now see in blockchain.
What are its regulatory implications, and does blockchain itself require regulation?
So, as with any piece of disruptive technology in a heavily regulated sector such as finance, regulation will have to evolve. I particularly think in areas such as data protection, for example. In the blockchain world, all of the data is stored on public ledgers. It's very different from how banks currently secure their data, which is obviously incredibly private and sensitively held. So I would imagine regulation will have to evolve there. For us as a technology company and for banks, I think we have a job to do to inform the regulators and to help them evolve regulation to make sure it's fit for purpose. The other interesting aspect of blockchain is what it can do to enhance regulation. If we take a topic, for example, like anti-money laundering, at the moment banks are responsible for enforcing that via compliance procedures, and periodically they report suspicious behaviour back to regulators. When the ledgers are public, even if the data is anonymised and encrypted, the patterns of behaviour can be monitored actively by the regulators, and as a result, technologies like blockchain, like distributed ledgers, can actually enhance the ability to police those kind of behaviours.
So how are banks reacting to blockchain?
Banks are reacting in a number of ways. What we've seen in the last few years, I guess, is a lot of departments with titles rather like innovation, for example, are looking at the technology. And there's been a bit of a disconnect between what they're saying from a technology point of view and maybe how they operationalise the use cases they're looking at. That's starting to change. It's probably a function of the technology maturing, and we're now seeing the business start to take more of an interest in it. For me, and I guess for us as a company, when we look at technologies like blockchain, we want to start with the business problem and then see how the technology can help to address it. And we expect that a significant amount of value is going to be unlocked through the use of technologies like blockchain and distributed ledger. We're also finding that there are some regulatory changes as well which are going to drive that. So for example, in the European region, the whole payment space is going to be reformed from the Second Payment Services Directive over the next few years. And that's going to cause an investment in new technologies around settlements and clearance, and blockchain may be an answer to that. There are similar measures in the UK and in North America. Again, blockchain may come in.
Tony, thank you very much.
My pleasure.
And thank you for watching.